Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to be talking about Tesla's technical breakout, what could be coming next for the stock. But even more important than that, we do have CPI coming out tomorrow. And I'm going to share with you all of your major expectations from your major banks, okay? Are they expecting a high or low report? How does this change the markets? All of that. We will be going over any and all economic data beyond just CPI. And you do have a couple of Fed speakers, which I think will be an interesting part of this. Now, with that said, you are again in August, which is seasonally not a great month for stocks. September is really not a great month for stocks. So I'll share my opinions around this technical breakout for Tesla and what could be coming next, okay? Do me a quick favor, hit that like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of this video for the best trading community in the entire world if you have not done so already. We're going out. We're finding those small cap AI stocks with incredible value that Wall Street is overlooking. And we have a track record of doing this, right? Whether it's Nebius or Applied Digital or Novartis or IONQ or just like name the stock that is popular right now, odds are we were investing in it first. Okay, so check that out, link down below in the description of this video, and on to today's episode. You can see today the percent of stocks trading above their 50-day moving average is down to 49.13%. So markets internally definitely look a lot different than what the headline S&P would suggest, that we have a pretty strong market recovering close to new all-time highs, whereas in fact, under the surface, it is not nearly as strong. You're not super weak, like it could be a lot worse, okay? But you only have about half of stocks above their short-term 50-day moving average. That's not like super great or super bullish at the same time. The AI Investor Sentiment Survey came in at 34.9% bull, 21.9% neutral, and 43.2% bear. We'll get a new one updated on Thursday. And today, we really did not have any economic data, but things start to pick up a bit for tomorrow. Today, you had a couple of bond auctions, no big deal. Tomorrow, we have core CPI, okay? Year over year, month over month, headline year over year, and month over month as well. Bunch of Fed speakers. Long story short, we're expecting a little bit of a rise to inflation, but not anything too dramatic. So if it comes in too high, that's bad. If it comes in low, well, that's good. Is 0.3%, okay? But it's going to come in at a decimal point. The best way to understand this is to simply do a calculation. Okay, 0.3% can be technically 0.25, okay, because then you're going to round up to 0.3. So 0.25 is going to read at 0.3, but it's actually right in the middle, okay? Times that by 12, which represents 12 months, that's 3% kind of annualized CPI. That's where, in fact, the core rate year over year is expected to come in at about 3%. But let's say you come in at 0.34%. That's a high 0.3, but you're still going to round down to 0.3 on the headline number. But times that by 12, and you're looking at 4.08% annualized inflation. Over a 1% difference between technically the same number. Okay, so the decimal point is going to be very important. That's why, even if we come in at 0.3, maybe it's not, bad at all. Or if we come in at 0.3, it could be really, worse than expected. Okay, personally, I don't think we're going to get a bad numbers tomorrow. I don't see the inflation. I don't think we're going to get a high number tomorrow. Again, anything's possible. I've been wrong before, but that's definitely not my view. Now, headline month over month is expected to come in at about 0.2%. Last month, it was at 0.3%. So expecting a deceleration on headline inflation. And headline year over year is expected at 2.8%, up slightly from 2.7% last month. Okay, so that's the actual expectations. Fed Barkin will be speaking at 10 o'clock in the morning and Fed Schmidt at 10:30 in the morning. let's see if some of them flip-flop. We've had Fed Kashkari now suggest that maybe we should cut rates. Fed Bostic suggest that maybe 2 rate cuts is appropriate this year. Fed Bowman strongly team rate cuts. Fed Waller strongly team rate cuts. The new appointed Fed governor by Trump is going to be strongly for Fed rate cuts. So there's going to be definitely some momentum to get some rate cuts going very soon. And 2 to 3 cuts this year is really where the markets are at right now, fighting between 2 or fighting between 3. And depending on how these inflation numbers come in tomorrow, it could move the needle towards, either 2 cuts or 3 cuts or, many consecutive cuts at future meetings. Okay, so this is the important thing to watch here in regards to CPI. Okay, now again, just a reminder, we have a bit of time before the September Fed meeting, definitely before October or December Fed meeting. So we're gonna get a lot of additional data. If it comes in hot, it doesn't change much. If it comes in low, again, doesn't really change much, but you could see a lower inflation report get more Fed officials bullish versus a higher report. I don't think people are going to get super hawkish on that. Okay. Now, here's the expectations. Okay. Core prices are expected to have risen 0.31%, which would bring the 12-month increase to 3.1% from 2.9% in June and 2.8% in May. Headline prices are expected to have risen 0.24%, which would lift the 12-month measure to 2.8%. Again, as I was saying here, okay, it's a decimal point. So for core, you're actually expecting 0.31%. Okay, so almost right at 0.3%. If, let's say, we come in at 0.25%, that would be a really good number, okay? It would still come in on the headline of 0.3%, but it would be on the low side, okay? Now, the previous month for core came in at 0.23%. If we could somehow come in around that number or lower, that would be a really, really good print, okay? Although, is that going to happen? I don't know. Now, here's the different expectations from different banks. Okay, Bank of America is expecting core month over month 0.31%. Barclays at 0.24%. That would be a really good number. BMO Capital Markets 0.28%. That would be a good number. PNB Paribas at 0.32%. Citigroup 0.29%. Deutsche Bank at 0.32%. Employ America 0.27%. First Trust 0.28%. Goldman Sachs 0.33%. Jefferies 0.25%. JP Morgan 0.34%. Moody's 0.30%. Morgan Stanley 0.32%. Nomura at 0.34%. Pantheon Macroeconomics at 0.31%. TD Securities 0.33%. UBS at 0.35%. And Wells Fargo at 0.27%. So Wells Fargo here, Jefferies, First Trust, Employ America, Barclays, and Citigroup are all expecting a lower than consensus number, or lower than the median forecast number, which would be good. So basically anything above 0.31% is bad. Anything below 0.31% is going to be better than expected. Although I do expect stocks will move quite a bit tomorrow based on this CPI report. Again, it's not the end of the world no matter what happens. Now, again, we are going to have some important earnings. Tomorrow morning, Circle, C, Pony AI, Cardinal Health, PaySafe, and some others. And then tomorrow and after hours, CoreWeave, Rigetti, Cava, and H&R Block, as well as some others. Wednesday pre-market, Arcos Dorados, Brinker International, Albeit Systems, RS Pharma, Marex, and then Wednesday and after hours, Cisco, Equinox Gold, D-Local, Red Robin. And then Thursday pre-market, you have JD.com, John Deere, Nice, Advanced Auto Parts, Birkenstock, and Weibo. And then Thursday and after hours, Applied Materials, New, Gambling.com, and some others. So again, these earnings don't matter too much. Tomorrow could be an interesting day, but it's really like Nvidia. That's the last big earnings that is going to move the broader markets. But you are going to have a lot of smaller cap AI stocks that are also going to be out there as well. Now, I did forget to mention the NFIB Business Optimism Index that is also going to be coming out tomorrow around 6 o'clock in the morning. And then again, Fed Barkin speaks at 10 a.m., Fed Schmidt at 10:30. And depending on how that CPI report comes out, you might get more Fed officials that kind of start to lean towards team rate cuts. Right now, Bostic is kind of getting there. He's not quite there. I would still put him in the more hawkish camp. Fed Bowman, Fed Kashgari, Fed Waller, the new appointee from Trump. Like, these guys are all either team rate cuts or very much leaning towards team rate cuts at this point. And tomorrow's CPI report could help solidify that. Now, throughout this week, on Wednesday, you don't have much, couple Fed speakers, but nothing too important. On Thursday, PPI month over month and initial jobless claims will be coming out. Fed Barkin will speak at 2 p.m. Again, do we get a flip-flop there or not? On Friday, you get retail sales month over month. Expecting a pretty good number, but down a little bit from last month. Export prices, import prices, New York Empire State Manufacturing Index, capacity utilization, industrial production, and Michigan consumer sentiment. 5-year and 1-year inflation expectations are going to be most important, mixed with current conditions and consumer expectations. So Friday's going to be another big day as far as economic data. So it's not over with after tomorrow's CPI, but heading into Friday as well. Now, I do think Tesla stock's going to get pretty interesting here, as I've talked about in previous videos. Like, I mean, we have this technical breakout that was confirmed today. There was a lot of good news today, including the what seems like expansion of the robotaxi network to non-invite only coming soon, which suggests you could have maybe hundreds of robotaxis operating in the Austin, Texas region soon. Although we don't have final details on that. That sounds very bullish. Okay. There's a lot going right for Tesla here. There's a demand surge happening right now into the end of the federal tax credit. Okay. Tesla's getting ready to start production of the Model Y L in China. Rumor is they've already started production of that. That sounds pretty good. Upon, more robotaxi expansions coming in the coming months and a new update to FSD, okay, coming very soon with 10x increase in parameters, all kinds of interesting stuff, okay. So for good reason, Tesla is breaking out to the upside. Question is, where does it go? And that's an interesting question because some people, like even Tom Lee, expect stocks are going to hit new all-time highs in August and continue to go higher, even though you are heading into a rough seasonal period in August to a lesser extent, and then September being the really bad month. What happens in August and September? Honestly, if you look at the charts, you would say stocks probably going much higher. But if you think about, market history and seasonals, you may not get a whole lot of anything. So I think you're at a weird moment where the technicals look really good, but you are heading into a seasonally rough period for stocks. I want you guys to keep that in mind. But you did enter a technical breakout. Now, if you can get to that 368 level, which I think is the next stop, okay? I think Tesla's going to hit 368, okay, in the more shorter term. Question is, if you can actually get above that level, then you can start to target some substantial upside, right? Then you could start to see Tesla stock in the 400s, right? That's where things get a lot more exciting. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of this video for the trading community as well. Have a great rest of your day, and I will see you in the next one.